Welcome to Bears in Exile. Today is December 19th, Monday, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And away we go. Well, today did not unfold as I had expected it to. We had Kim Il croak over the weekend, and the market just hated that idea. For whatever reason, you would think that it would be a good thing, but market oftentimes is just totally opposite. And needless to say, we had a big, ugly red day, 100 points to the downside, a little extra on the bottom, a lot of extra on the top. Still below the 200-day moving average, below the middle Bollinger Band line, below the major price consensus level, and breaking the midpoint of the big green bar that we've been watching. Very interesting. Now, is this the end of the world? The Bulls are crushed, the Bears are victorious, etc., etc. Well, we know that that isn't completely the case yet because we're just barely getting the short-term moving averages into the bullish bar. We can have it dip inside here, settle, or bounce, or break. But nonetheless, this isn't just the beginning of the big, huge drop. Well, I mean, it could be. But more likely, since we do not have complete crossover prior to entering the bar, the odds are lessened that it is just going to completely fall apart. And we're going to see some more evidence for that here in just a few moments. Now, we still have the 14-day RSI moving average pointing up. That is big. We have the CCI now in oversold. We have the fast stochastic the slow stochastic almost down to the fast stochastic, waiting for those to turn up. Down on the RSI, down on the histogram, down on the MACD. Yeah, it's not attractive. But position of the moving averages, position of the 14-day RSI moving average, I don't think that it is game over yet. Could be totally wrong. We could be going for that test of the bottom area like I was previously thinking was possible. But nonetheless, I'm still thinking that we're going to have some kind of a bounce. More to come on that. SPX, also ugly. We have a flat line in the long-term moving averages. Short-term moving averages appear to be trying to break away from it. We closed below the lower price consensus level today. That is significant. We also closed below, actually right at the major price consensus level for the previous month and stopped. Actually just got right back above it and stopped. So interesting how these things play out. Oversold on CCI, all these things are the same. Slow stochastic, is already almost to the oversold line, which is more developed than the Dow. So that is interesting as well. One other thing to look at on the Dow that I think is interesting. We came down here, we have, last month we had major buying in this area, came back from it. We got back up to this level where we had some buying before, crapped out right at it, and fell back down, which is where we are now. You can see that we have some decent volume here as people are selling into what they bought back here, and now it's backing away. What you don't see in this area right here is the volume has gone green, and so people are buying this. It doesn't look like people are buying this, but people are buying this. And if I had room to show you all of the volume stuff, that would be interesting. However, we do see something else here, which is we have the main volume areas right here and in here, which was the previous month. And below that, we kind of have this little null area where there isn't much volume either month. And then below that, we have increased volume once again. So since we're getting out of this congestion area, if it doesn't pick back up, then we can expect the next support area to be in here through the 11,600 area and the 11,400 area. Now, if it does break that, then we're probably going to be in big trouble as there's no real volume to stop it. But this should be a significant support area should we get down that far. Now moving right along to the VIX. Very interesting. A little miniaturized hammer. It's not an uptick. Still below the 200-day moving average. Still have, except for the fastest short-term moving average, we have all the short-term moving averages still pointing down. We have the bearish bar forming, and we're going to have to get all the way through the bar to hit the psychologically important $30 level. Most people, I think, at this point are abandoning the $30 level as being really important and switching out the 200-day moving average in the $25 area for that. So, very interesting. Uptick on the CCIs, people are buying today. Downtick on the 14-day RSI moving average, still pointing down. Stochastics not really doing anything. Uptick on the RSI, getting out from oversold. And side tick on the MACD, slight uptick on the MACD histogram. Still isn't pretty. If it gets stuck down here, that's not going to be good for the bears. But certainly we do have some very low readings, and we should have a turn of some point in the not too distant future. Hopefully that won't be this week, but if it is, then yes, the bulls are in trouble. It's kind of interesting to me that the candle of the VIX does not match the candle of the Dow or the SPX inversely. So, very, very odd. Alright, moving on. TNA. Oh, yeah. Had a big, ugly red bar today. Just totally mauling the last three candles. And, crazy. We actually took another for fun trade on TNA today. And we are a little bit underwater. Ugh. The moving averages, short term, appears to be breaking down with this huge, nasty candle to the downside. Middle Bollinger Band above it, getting back below the lower price consensus level. It is ugly. It is ugly. And, you know, before today, if we were cutting that off, it looked like we were coming back up for a bar retest, potentially, maybe going in for a double flat line. Yeah, today definitely put a little wrench into that plan, but hey, that's okay. Some days you just don't have a good day. But we still have the 14-day RSI moving average still pointing up. Its angle is not the greatest, but it is still pointing back up. Stochastics getting very low. We should have some kind of a turn over the next, I would say, a week. But hey, it might even turn up before then. Down on the CCI, getting too oversold. Down on the histogram, down on the MACD. So and the volume is red, so people are afraid. Afraid. Which actually, when you think about it, it isn't too bad because we have red volume all the way from here going back to here, and even with all of the selling, it's still holding it up pretty well. It's not way down here at you know, the low 30s or the high 20s. So to me, that's a positive sign. And hey, why not? I'll have some fun. I'm going to go to this 60-minute and just to see what we can see. Yep, big, ugly, bad day today. Just started off nice, fell apart the rest of the day. Short-term moving averages just totally crapping out. 14-day RSI moving average pointing up. Stochastics massively oversold. CCI oversold. RSI pointing down. Down on the histogram and the MACD, and we can see that we have the potential for positive divergence, but we haven't broken this previous low yet. But if we do, once we do, this histogram most likely will not be as deep as this one, and then we'll have a positive divergence. So could also see that in the RSI. We won't see it in the CCI or the stochastic, but hey, that is okay. Well, might as well do it on the Dow while we're here, right? So 60-minute on the Dow. Let's see what we can see. We can see the 14-day trying to turn up. Stochastics massively low. CCI massively low. RSI trying to tick up. And MACD and histogram also trying to figure out what they're going to do with themselves. You can see positive divergence already here, if we were to turn up at this point, on the MACD histogram. Low, higher low. Low, lower low, so that's pretty cool. And beyond that, we can see that we also have the potential for positive divergence on the stochastics, and I think RSI also. So we do have some signals that we should have a turn up. And in this low volume, no volume holiday week, anything is possible. Moving on, UUP, the belle of the ball, the star of the show. Primary reason for thinking that we should have a move up in the general markets. Yep, we have a green candle once again, even though we had the down tick. Remember, we have 4 days to resolve a down tick, so 3 more days. And we can see the excessive separation. We don't have much in the way of wobble. We have the middle Bollinger Band below the short-term moving averages, which is positive. And we are above the upper price consensus level, also positive. Now, we also have the CCI very high, trying to get out of overbought. We have the stochastics rolling over, trying to get out of overbought. We have the 14-day RSI moving average, which actually was ticking down and now did a side tick. So that's not good. That kind of puts a little bit of a wrench in it. Uptick on the RSI, uptick on the MACD, and a slight, ever so slight downtick on the MACD histogram. Very interesting. We can see that we have negative divergence in the MACD histogram. Here's the high and another high. Notice sloping down. You can see it in the RSI, sloping down. You can see it in this stochastic, sloping down. And we do not see it on the CCI, so we don't have that one. But nonetheless, it is there. And this is in the daily time frame, so maybe it will take a little bit longer to resolve, but nonetheless, I think that with these about to roll over, a correction is due. Let's see if FXE can confirm it, the euro. Yeah, we had an ultra slight uptick. I'm not even going to count it, it was so slight. And but nasty day for the euro once again. And we can see that we have excessive separation in the short-term moving averages. We have a tiny bit of wobble, but nothing to write home about. CCI getting out of oversold. Stochastics trying to do the same. And this is interesting. We actually have a slight downtick in the 14-day RSI moving average, whereas it was ticking up the last couple of days. So that's not good. Down on the RSI, once again getting to the oversold line, slight uptick in the MACD histogram, slight downtick in the, or actually a downtick on the MACD itself. And looking for positive divergence, RSI, very slight, stochastics, ultra slight, CCI no, and yes in the MACD histogram. So there is a little bit of a case here. We do want to have a bubble corrective move at the least. A bar retest would be preferable, but everyone hates the euro at the moment. Everybody. As more and more people pile on the shorts for the euro, all of that means is once we get a swerve, there's going to be a big short covering rally. So looking for that. Hope it comes soon, and we will have to see. GLD down once again, spinning top, super excessive separation, uptick yesterday, and we are nowhere near being able to resolve that. 3 more days to resolve it. CCI getting out of oversold, stochastics trying to follow suit. 14-day RSI moving average still pointing down, uptick on the histogram, downtick on the MACD. Downtick on the RSI getting to oversold line once again. What an ugly, ugly condition with stinking gold. How about silver? SLV. Nope. It is, at least it's holding the floor. That's nice. But downtick on the 14-day RSI moving average after it tried starting to tick back up. Stochastics massively oversold. CCI oversold. Uptick on the MACD histogram, downtick on the MACD, downtick on the RSI, not yet at the oversold line. You can see the excessive separation here, and this one has some decent wobble. Can get worse, but it is more apparent than the other charts that we were looking at. And there you have it. There is the market overview for tonight. Looking for a bounce. Hope it comes. And We'll see if Santa is, if we've all been good little boys and girls this year. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.